you've solved every one of their problems, you're creating a lot more value. That's really, really important, is consultatively buying and engaging not only with the seller, but you're a market maker with the buyers as well.
Guys, this is huge value out here, right? What's up, guys? Welcome to the one and only Investorlift office hours. We have a really cool guest on today, Zach. Zach is one of the greatest buyers in Investorlift history, 4,000 deals. Today we got a buyer, but not just any buyer. I think the best buyer in Phoenix. All right, let's dive in. So first of all, Zach, thanks for coming on the show today. Really appreciate it.
Honored to be here with the legend yourself. Honored to know you in person, and Luigi and your whole team and your brother. Love collaborating with you guys. Love watching the infinite growth that you've had. So it's an honor and privilege to be here. So thank you.
Thank you for coming on. So I got to brag about you a little bit. You are a legend in Phoenix. Phoenix is a city of legends. And of all the legends, you're at the top of the game. I mean, on the buyer side, I don't know anyone that has a better rep on the street than you. Tell us, what were you doing before real estate, and how the hell did you get in real estate?
Great question. So born in Detroit, hustler, grinding on the streets, trading baseball cards, shoveling snow, just have that entrepreneurial spirit in my blood. Didn't know what route I was going to take. My father's an entrepreneur, started a law firm. My grandfathers both had different businesses, but I didn't know 100%. Went to business school at Indiana, Kelley School of Business. I started reading the Forbes magazine and Wall Street journals and always thought I wanted to do something in finance for sure. And I learned Spanish, so I'm bilingual. And I started researching different careers and had opportunity to work on Wall Street, trading options and working for some big firms out there, and realized I don't want to work for an institution. They're in complete control. Wall Street, and it sounds super sexy, but when you really get into the grind and you break down what you're going to make per hour, and you're working 18, 19, 20-hour days, 22-hour days, and you're making these big institutions big money, you're just a number to them. They really don't give a shit about you. And at the end of the day, I always like to say, you want to be the captain of your domain. And how can you control your future to the best of your ability? And you start looking at all the different investment vehicles out there in different sectors. And at the end of the day, there's one sector. If you look at the Forbes magazine and the wealthiest people in the world, 99% of them are all connected, and it's correlated through one thing: real estate. And so I said, fuck, I got to get into real estate 100%, leverage my background in finance and Spanish and people skills and, engagement, and my platform would be real estate. So I came out to Arizona in 2002, didn't know anybody, and hit the streets running. I got licensed in 9 days, the fastest possible. I put my head down, but it was just a hustle and grind, just like any other business out there. There's no special secrets or special sauce. Everyone thinks there's all these different programs and all this stuff. At the end of the day, it's about relationships, transparency, vulnerability. I like to say money is made in the streets, not behind a computer. So you got to get out there and start developing and cultivating real relationships, letting people know who you are, projecting and manifesting and bringing that tangibility to life. I don't have some big commercial space. I don't have some big storefronts. I just put my head down and grind and really keep it as thin as possible and vertically integrated.
You went from no capital, leverage other people's money, private lenders, raise your own fund. And then now are you financing all of your own deals yourself?
So I'm self-funded at this point. I still bring in one or two different people that were early adopters, early investors in my business. I don't believe in being greedy. And I think that you always got to remember where you came from and remember your roots, and giving those people an opportunity when you were nobody. And still, I don't consider myself anyone special. I'm just a grinder from the Midwest. But when you've developed into something, you've created net worth, to not be greedy. It's fun to have some level of partnership and engagement along the way. And at the end of the day, it's not just about the money. It's about your legacy and engagement and help transitioning other people and other families create independent freedom and wealth. A lot of people say, how do you pick and choose if you're going to bring an investor in a deal? Truthfully, I like giving the investors some of my best deals, because at the end of the day, the more money you make them, the more they're going to want to reinvest. There's an abundance of opportunities. There's always deals. And one thing no one ever has is unlimited capital. Anyone who says they have unlimited capital, they're full of shit.
What was it like getting through 2008? Because, you were flipping a lot in Phoenix. Did you get hammered really hard? How was that?
Absolutely. Thankfully, I've never defaulted. I've never missed a payment on anything in my life. And if you really look back, and of course, hindsight's 2020, yeah, it hurt because you don't want to buy when the market's imploding, right? I had assets that were $300,000 that went down to $25,000 and $30,000. But the reality is, if you would have stayed the course, which we did, and hunkered down and rented out and lowered your overhead, Everyone would be even way better off today by staying the course. It's a marathon, not a sprint. You can't get emotional in times of turbulence, right? If you're on a plane and the thing starts shaking, what do you want to do? Jump out of the plane? It's an automatic death. If you stay the course and believe in higher beings and relax and breathe and recognize that the probability of that plane crashing is 1 in a trillion, be patient. It's all about delayed gratification. Everyone today wants that immediate sugar rush, that immediate gratification. But my mindset, and it's really transitioned from the beginning of flipping, is, hey, delayed gratification. I don't need to make that $30,000, $40,000 today. I'm going to let it sit and appreciate and get the capital gains and the tax benefits and the rental income.
Love it. Yeah. Buy when it's slow. Yeah. If you sell when it's slow, you're locking in those losses.
Right.
Hold on to it for a little bit more and you're going to ride the storm. Love it. Love it. Great tips there. Tell me, how is Phoenix right now? Because the rest of the country, we got hit pretty hard here. Phoenix seems to be lagging. They've been telling me that buyers are still a little bit scared. You're the top buyer in Phoenix. Tell me what's going on in Phoenix.
My rate of confidence in our local market has never been higher, actually. We got a lot of people moving here. We've got billion-dollar developments with all these tech companies coming here, Chinese companies, manufacturers, etc., Intel. I mean, we need housing. We have a housing shortage, in fact. So to be in the game and acquire assets, long-term trajectory looks, I'm very confident and optimistic. But as long as you always buy, and people always neglect this, if you buy with equity, you mitigate risk. When we go back to the downside, when the market imploded, you don't always ask yourself, how much can I make on a deal? You ask yourself, what would transpire if some massive, COVID-2 comes out, or another world war, or whatever it may be that puts a major pause in the market? What is the downside risk versus the upside potential? When you can do something called contingency planning, for everything that I do, you're mitigating risk. If you can plan that out, you're going to be successful.
Yeah, it's like Warren Buffett and Charlie Munger, they always say the reason why we're so successful is we just spend our times thinking about all the ways that shit's going to go down. How does this deal go bad? And then what we do is we just mitigate all those risks, just de-risk the deal. So your philosophy is always be buying.
Always be buying. So I have 4 pillars on my acquisition. So there's no emotion. Number 1 in today, can this be a legacy property? If I buy this, whether I decide to quickly hotel it out, retail it, or just keep it as a rental, is this an asset that I want to own for 30, 50, or own forever? If it's on some busy street, if it smells weird, if there's something intangibly wrong with it that my gut says, I don't want to own this, it's an immediate no. Is there equity after restabilization? So if I buy the home for 300 and I put in 50 and it's worth 400 at the end, there's 50,000 in gross equity. After you sell it, let's call it, 15%. Does it meet a criteria that has enough equity that I could essentially pledge it to the bank to recycle that capital so I can continue to grow infinitely by scaling, by leveraging bank funding? If there's no equity, there's no deal. Number 3, what is my cash on cash return if I go to a rental strategy? And so if I can make 8, 9, or 10% right now, obviously cost of capital, even on, HELOCs, for example, or lines of credit, you're probably in the mid 8s. If you do your due diligence and repackage to investors certain things, that's a huge value add that you can do. That's another step. Plus, it may decide that you guys want to retain it. I tell young people like yourselves in mid-range or whoever you are, first, figure out if you can digest that deal. Do you have OPM? Can you get private capital, without over leveraging yourself? Because you're the one that should make that money, season it, and get a long-term capital gain than paying 40%, taxes on it. So that's really, really important for that passive income and long-term personal finance. We joked about it. Zach, how many deals have you done? 4,000, whatever. I said, I don't really track that. I just care about my PFS, my personal financial statement. But at the end of the day, I wake up broke every single day because I like to go hunting. I like to go fishing. I love the art of the deals. I love engaging. So I don't care. My net worth to me is irrelevant. It's what can I do today? That's in the past. And then my 4th pillar, which no one talks about, is can I buy an asset less than replacement costs? There's automatic value in that, guys. If I can go out and build something cheaper than I can buy it, why am I buying that asset? No one's talking about it. So if you can factor in what is the cost for land, what is the cost of development, and I'm going to pay a premium today to own it, but there's no real benefit, then who gives a shit? Then I'm going to buy it. So if I can deal, and that deal fits all 4 of those parameters, cash on cash return, equity, legacy, and less than replacement costs, next, send me the contract.
Love it. Love it. Guys, this is huge value out here, right? Like this is what 99% of us are fucking up on our deal postings.
you're a salesman, right? You have an amazing asset and it should sell, but sometimes people are blindsided. They're busy. They're not really digesting it. For example, nobody's doing this. Nobody is doing this. When you send out a deal, call the other agents in that same subdivision with that same type of property and ask them, how much activity are you getting? Because me as a buyer, I'm going to do that. I want you to streamline that process for me. Plus, it's going to help sell your deal. Call those agents in that same neighborhood. Number one, you're going to get more opportunities because you're going to introduce yourself as a buyer or an investor in that neighborhood. Hi, I'm whoever. And I'm just curious, do you have any other buyers or what kind of activity did you get on your current listing? And by the way, you may be able to sell the deal to one of their backup buyers and get a retail price and sell to a wholesaler like me and maximize your yield. Or you may decide, wow, I mean, you got 30 offers. It's been 2 days. That's huge intangible information that nobody's capturing. If you just take the time of 20 extra minutes to do that, you're going to maximize your yield.
Yeah, I always tell people dispo is easy as can be. Number one, if you have investors, because you need that first, you need some fucking people to talk to. But number two, if you got some people to talk to, if you believe in the numbers, you should be willing to buy it yourself. And if you're not willing to buy it yourself, then you're betting on the greater fool theory. What do you see wholesalers screwing up on the most when they send you deals?
First of all, always be in control of the deal. If you're repping a deal and it's already on a list and you're not really in charge of it, and then you call me and I commit to the deal and all of a sudden it's gone, you've ruined your reputation. If you're going to disseminate something, have that deal locked up. Be, vested, have equitable interest in that property. Don't just daisy chain stuff. By the time you start remarketing someone else's stuff, go out and source deals. Call agent. There's a million ways to source deals. Source your own deals. That's number one. Number two, when you go out and take pictures of a property, always be transparent. If there's a structural issue, if there's something that you would be nervous about as a buyer, make sure you convey that. When we're dealing with, hundreds of thousands, potentially millions of dollars on the table, any good buyer is either themselves, which I always walk every single property myself, or, somebody from their team or contractor is going to walk it. When they discover some latent defect that wasn't conveyed, again, they're going to be extremely upset. They're probably going to post saying, this mother effer tried to sell me a home. They sent all these great pictures, but they obviously failed to talk about the structural issue or the AC that was falling off or stolen. Always be transparent and convey all the data, the good, the bad, and the ugly, because it's about longevity. The other thing that I think is really important when you talk about things that bother me from a wholesale perspective is someone sends out a property and they say,
Zach, here's the property, here's the price.
And I say, okay, you're asking $390. I'm good at $390. And they say,
I'll let you know.
What do you mean you'll let me know? What are you letting me know? I'm giving you a full price offer. Send me the contract.
Well, I'll let you know by the end of the day.
No, that's okay. I'm not interested in your property. What is there to let me know? If you're going to tell me I'm taking offers, I hate that. Have a definitive price. Nobody likes unknown information. If you know you're going to make good money and you have a great buyer, why jeopardize that relationship? It's not just about price. It's about, is there post-possession? Do you need a place to transition to? What is the full scope of the deal? How can I solve all of your problems? A lot of times wholesalers will call me in advance because they know you're not going to jeopardize that relationship or go behind your back to say, hey, what will you buy this for? Here's the pictures. Can you do a 2-month post-possession? Do you have another home in your portfolio that you can move Mary Jones and her mother to, right? All of a sudden you step in there and you're like, I'm working with so-and-so as my partner, and they can Google search you too, because a lot of times buyers come and say, hey, my partner, Zach, pull them up. There's a lot of market credibility, or you need proof of funds of a deal. And that buyer you're working with them, JVing, somebody else may potentially give them more money, but all of a sudden you're relocating them. You've got another home for them. You've solved every one of their problems. You're creating a lot more value. That's really, really important, is consultatively buying and engaging not only with the seller, but you're a market maker with the buyers as well.
That was huge, guys. Like, that was fire. That's what I call going 11 and 10. Investorlift, we're always like, most people go to 9 out of 10. If you go 9 out of 10, you will 100% be out of business in 3 years. If you want to survive, you want to make the money, the only way to really crush it, you got to go 11 out of 10. You got to do everything that no one else is doing.
I'm licensed, so I believe by being vertically integrated, so I buy and sell it. If I was retailing something or listing something, I leverage my license. But even if you're not, get current market numbers that the seller can sign off on for comparable properties that they can initial. A good wholesaler will say, listen, yes, you can retail the property. Be honest. I was all the time and it paid massive dividends. You could retail your home for this if you spent X amount of dollars. So you're going to give them a full laydown. Here's current comps. And by the way, initial this. So if someone comes in and says, hey, Tristan, you came out and my mom, you bought the home for $200,000 under. Tristan's going to say, that's what you perceive, but here I actually provided, here's the current comps within 30 days in the same subdivision, showed them what it would take to get to this retail level. Here's the breakdown of repairs. So no one else is doing this. You come in with a full breakdown and show, listen, yes, if you retail, traditionally you should. There's no guarantee in anything that you do. You should make more money because you're putting money, you're investing in it, you got the time. You don't have the money, you don't have the time, you have a high utility to sell, you're sick with cancer, you want to live your life. Is that value worth to leave 10 or 15% equity potentially on the table? Because there's no guarantee if you retail and do all these things, you're going to get this. So let's back into this number. Now, if this makes sense to you, I want you to initial this so you show that I gave you the number so that we're all on the same page and educated you. Now you can sign the contract. Nobody's doing that. If you do that, you're proving why you should buy the deal and you're treating them fairly and everybody's got a number, right? What is that money worth to you today? Is it 10%? Is it 20% off potential retail? I've never been to a court. I've never been sued because if you do everything transparently, open and honestly and prove why you're creating value or solving a problem, you're going to be good.
It's information selling is what you're doing. I think it could actually help you close better.
1,000%.
And it not only does that, but it all because now they trust you. Like you're their guy. You're like, wow, he's telling me all this shit. I trust this guy. I was talking to a guy the other day. He's like, yeah, dude, the private money lenders look for the guys that show up a lot in the second positions because a lot of those are private. Do you agree with that?
No, I don't actually, because I hate secondary positions. First of all, you better be damn confident in what you're doing. If you're kind of like, well, I don't know, or you're indecisive about something, that's going to come off very, nerve-wracking for the investor. You always want to put yourself in the shoes of that investor. Number one. Number two, you got to know the macro market, right? Don't just talk to me about the deal. Sell me on why I should invest in Arizona real estate. Number one, hey, let me just talk about the broad market. This is why I'm doing what I'm doing. This is my history of success. Here, for my recollection, you cleared 265 in a month. I want to know that you have that ability consistently to make that kind of money because now you can service and repay me as an investor. So prove what you've done in the past for the past 12, 24, 36, your history of success in real estate and why that gives me confidence to invest in your wholesale deals and your buy and holds. Number two. Number three, it's not about what you want and the yields you're looking to give. It's about the liquidity of the investor and their risk tolerance and where they're at. Treat yourself like a financial planner. Mr. or Mrs. Jones, thank you for reaching out to me. Then I asked them, what are you investing in? What's your time frame on the investment? It's not just here's the return. I need to know about you so I can place the proper deal, whether it's wholesale, whether it's buy and hold and I'm going to refi, whether it's a JV and there's equity, or it's just a preferred return. I want to prove to you that your investment is going to be at 60% of a future value to mitigate risk. And what type of yield are you hoping to achieve? A lot of times they're going to say, I love 5%. I like 6%. In our minds, we have this predetermined, it's 12% and this and that. Let those people dictate. And if it meets your needs, you say, I totally respect that. And by the way, this is critical. No matter what, I'm coming to you, right? If you're going to be proactive to ask somebody for the capital, if they're coming to you, hey, I appreciate you reaching out. I've got a lot of people reaching out, so I want to make sure it's a good fit. It's never they're the only ones. You're in the driver's seat. You're the captain of the domain. As soon as you need or want that money immediately, your yield and price that you're going to have to give them is going to be through the roof. But now you're in control. The other thing, which is really important, is people want money in hard assets. Sedentary money, mattress money is losing to inflation. Talk about that. Inflationary risk at 8-9%. Otherwise, you're losing every single day by opportunity cost of sedentary capital.
Boom. Guys, was that fire or what? Like gems. That was a master class. Okay, Zach, I knew it was going to be massive.
I love this stuff. Honestly, it's like we talked about this briefly before. It's like nobody cares your net worth. Nobody cares how many homes you have or how many deals you've done. How do you treat them? How do you make them feel just like in any other business? And your legacy is, again, changing the trajectory. If I could change your mindset to not sell me a deal or sell your top buyers a deal, to pivot and digest those deals yourself, you're only as good as your last wholesale deal. But if you can figure out a way to capitalize and have a retention with these assets because you're getting great prices, you're direct to seller, there's huge equity in there, to capture that equity, to build your net worth, that's what I'm here to do, honestly, to encourage you guys to pivot your mentality to hold these deals. I really do in my heart of hearts. I think it changes your financial being, your liquidity in the future, just everything to build your net worth and create that passive income. That's what this business is all about.
Zach, thank you so much. Enjoy your weekend. We'll see you in Phoenix very soon. I'll try to make it out in the next couple of months. Thank you, all of you guys, for tuning in today. And again, we will see you next Friday, same time, same place.